Thank you, Julian. Our next presenter will be well known to many of you. Peter Bailey has headed Wine Australia's Insights team for 2 decades, and in that time, he's seen many changes, and safe to say, there's probably a lot more coming. To talk us through the global outlook for wine and how this is impacting on Australia's wine exports, please welcome Peter.
Thank you. We do pretty well in height diversification at Wine Australia, as you can tell. And before I get going, I just really want to acknowledge my team, the Market Insights team. So you've already heard from Sandy and Angelica today, otherwise known as Sangelica, doing an amazing job. And I think Susanna's also here, hiding at the back. Yeah, there she is over there. She's also amazing as well. So yeah, just a big shout out to those guys. And also to Cameron down the back too, who makes all this happen today. He obviously doesn't want to be shouted out, but I just have done it. Cameron, can you stand up? Yeah, awesome job. No, he's amazing as well. And also, one thing I've observed today, just looking around the table, there's a declining consumption in sausage rolls, which is unheard of. 20 years ago, there'd been none left on the table. But looking around today, yeah, they're gone. My presentation today will focus on the global outlook for wine. So I'll address the key challenges faced by the wine sector, examine the major trends that are influencing wine consumption globally, discuss how these trends are impacting on Australian wine exports, and then in light of these challenges and trends, highlight some of the potential opportunities for Australian wine to help grow its presence around the globe. And many of these have already been touched on this morning, but I'll be more speaking from a global perspective. So the key challenge, a long-term decline in global wine consumption. So in the 5 years to 2024, global consumption of wine fell by 3.5 billion litres. So that's the equivalent of 33 billion standard glasses of wine, which I understand quite a few of them were consumed last night for the market team. That volume of global wine consumption is now at the lowest level, as Paul mentioned, since 1961. So while people back then were drinking far more wine per head, the population was much lower. And IWSR have forecast wine consumption to fall by another 1.5 billion litres by 2029. So if that happens, the global wine market would have shrunk by 20% over the decade. And the total loss in wine consumption would be more than 4 times the size of Australia's annual wine production volumes. And the volume of wine consumption is falling due to a smaller population of wine drinkers who are drinking less. So between 2021 and 2024, the number of wine drinkers around the world fell by 5 million people. And the decline was particularly strong in some of Australia's key wine export markets. For example, the number of wine drinkers in Japan fell by 2.6 million people, in China by 2.4 million, in the UK by 1.7 million, and in Australia by 1.6 million. And adding to this, between 1990 and 2024, global wine consumption per capita fell from 4 litres per head to 2.5 litres per head. And the more mature and established markets are reporting the most moderate drinking patterns. So, what trends are driving this decline? One of the major trends influencing wine consumption is the rise of mindful drinking, which was touched on earlier today. Increasing numbers of consumers are choosing to reduce or eliminate their alcohol consumption due to health concerns. Some people are drinking less but choosing to pay more, while some are seeking no and lower alcohol options. And then we have movements like Dry January and the growing Sober Curiosity movement are also gaining traction, especially among younger consumers. And then we've got health and wellness campaigns driven by organisations like the World Health Organisation, which have also played a role in this changing perception. And their message that there is no safe amount of alcohol has resonated with health-conscious individuals, further contributing to the decline in the demand for wine. And the trend is likely to be structural rather than cyclical, as moderation is becoming the norm, especially in mature markets. And the social stigmas and cultural barriers around drinking less alcohol have been broken down. And mindful drinking is evident across all generations. And wine drinkers who are moderating consumption are probably unlikely to return to previous consumption levels or may reduce their intake by even more. Looking at demographic shifts, by 2040, the global population is expected to reach 9 billion people, and the demographics of the population will continue to evolve. On average, global consumers are getting older, and I can attest to that, and living longer as a result of declining birth rates and rising life expectancy. So this is leading to a growing number of increasingly affluent senior consumers. It is therefore important to consider how best to cater for the needs of older consumers in the years ahead. They are also the biggest wine drinkers, but moderating their consumption. And the battle to recruit younger drinkers to wine continues, as many mature markets have become increasingly reliant on older generations. However, younger consumers are drinking less alcohol than previous generations, often choosing to abstain altogether for periods of time. So the failure to recruit more enthusiastic wine drinkers will limit involvement in the wine category in future. So this poses a significant threat to future value growth globally. As consumer needs evolve, preferences are changing across all beverage types. One major development is a surge in demand for functional beverages that cater to consumers who seek more than just hydration from their drinks. These beverages are specifically formulated with ingredients that offer additional health benefits, such as boosting energy, improving digestion, relieving stress, or supporting the immune system. And companies are experimenting with ingredients such as adaptogens, probiotics, and collagen. And the thirst for functional beverages has seen strong growth in products such as energy drinks, sport drinks, vitamin and botanical infused waters, and fermented drinks as well. So while the rise of functional beverages is driven by the mindful drinking trend, the need for refreshment remains an important driver across most of these growing beverage products. The occasions when wine consumed is also evolving. Wine has become less of an everyday drink and more of an occasion-based drink. So this is impacting on both consumption at home and in the on-premise venues, as James and Sandy discussed earlier for the domestic market. At home, people are drinking less often, and while this is partly due to the moderation trend, importantly, it also is because there are less traditional drinking occasions at home, such as nightly family dinners, which is also touched on earlier. On the positive side is the rise of JOMO, not to be confused with ScoMo. This is the joy of missing out, the opposite of FOMO. So linked to health and wellness, JOMO reflects a cultural shift towards enjoying moments at home, away from the noise of social events. So instead of going out, people are investing in creating premium experiences in their living rooms, and this is having an influence on beverage trends. And as James discussed earlier, there are also significant changes in the on-premise channel. Motivations for visiting the on-premise, especially among younger consumers, are changing. Younger consumers are increasingly seeking experiences beyond food and wine generally ranks last in the drinks categories they consume in the on-premise. And this is happening globally, not just in the domestic market. On the other hand, boomers like Martin stick with the more traditional occasions centred around food, and wine is their preferred beverage. However, boomers are less frequent visitors to the on-premise, and they're also spending less. Proportionally, this is having a greater impact on wine, as it is traditionally consumed during food-led occasions. And then one emerging trend that we're seeing is that consumers are increasingly opting for single category drinking occasions. Currently, 66% of drinking occasions involve just one category, up from 49% in the previous year. And beer is the most commonly chosen single category beverage. While health concerns are key drivers of the reduction in wine consumption, economic pressures due to higher prices and other financial concerns are also causing many to drink less wine. Due to the cost of a glass of wine rising to the equivalent of a cocktail, there may be an element of risk mitigation for consumers avoiding wine in the on-premise. So for the same cost, the uncertainty over the wine style and quality, if the bottle has been open for some time, may lead to some consumers not choosing wine. And then geopolitical uncertainty. So geopolitical tensions and international conflicts are disrupting supply chains, making it difficult for wine producers to get their products to market. Trade barriers, tariffs, and political instability can add significant costs to the production and distribution of wine, reducing its profitability. And the announcement back in April by the US government of the imposition of sweeping import tariffs across the globe will add further pressure and uncertainty. And to quote Rory Stewart from The Rest Is Politics, we are in the most unpredictable global trade environment that's existed for almost 100 years. So while it's important to recognise the cost of living pressures and geopolitical uncertainty, they're practically outside of the control of the wine sector. So it's therefore more beneficial to focus on the trends that we can actually do something about. As around 60% of the wine that Australia produces is exported, these global trends have a significant impact on the Australian wine sector and on our international trade performances. This chart shows the volume, which is that shaded area, and the value, the green line, of Australian wine exports over time. It illustrates that there has been a cyclical nature to our exports, with value hitting $3 billion twice in the last 20 years. The first time driven by exports to the UK and US, and then the second time due to growth to mainland China. The introduction of import tariffs on Australian bottled wine in mainland China was a major market shock that was unique to Australia and saw exports plummet quickly, but also surge rapidly when the tariffs were removed. However, given the decline in wine consumption across the globe, including in China, export volumes have not recovered, and we cannot expect that the latest upswing in value will return exports back to $3 billion. So this current cycle is likely to have a lower peak as global wine consumption is now significantly lower and not forced to grow in at least the next 5 years. In the next few slides, I'll then look at Australian wine exports and how they're faring in our key export markets or regions, including a sneak peek at the preliminary export figures to the end of June. So the latest export report will be released on July 29, and the data will be available to access via our export dashboard on the Wine Australia website on the same day. So firstly, to the Americas, there is unprecedented uncertainty in North America, which would need a dedicated market update and a few bottles of red wine to make sense of, as circumstances are changing by the hour. Australian exports to the US have been in decline, with volume falling by 5% per annum over the last 5 years. Volumes are now at the lowest level since the early 2000s. And this is principally due to the difficult market conditions in the US. While it remains the world's biggest wine market, wine consumption in the US has been falling since 2020, due mainly to cost of living pressures and health and wellness concerns. And IWSR have forecast consumption to continue to decline out to 2029. So this drop in wine consumption has resulted in wine inventory levels in the US market hitting 30-year highs, negatively impacting on imports and trade. Until inventory levels are reduced substantially, exports will likely remain subdued. In comparison, there is a more positive outlook on exports to Canada. While volumes are down, this was due to a decline in unpackaged shipments, which more than offset growth in premium bottled wine exports. The growth in premium wine exports has lifted the total value of exports to Canada in the last 12 months, particularly in the last quarter, which saw an increase in the sales of Australian brands that were already available in Canada. And this growth has been assisted by the removal of American wines across Canadian liquor boards in retaliation to the imposition of tariffs on Canadian products imported into the US. So data from the Liquor Board in Quebec, for example, indicates that American wine sales fell to zero in the quarter ended May 2025, while most other sources grew. So Australia, Chile, South Africa and Argentina outperformed the larger European sources of France, Italy and Spain in percentage growth for that quarter. So these trade conflicts with the US may offer additional growth opportunities for Australian wines in Canada over the longer term, but nothing is guaranteed. The EMEA region, so that is Europe, Middle East and Africa, imports more Australian wine than any other region. And the UK remains the biggest destination for Australian exports by volume. But after a period of growth, volumes have declined over the last 2 years. However, the value has been relatively stable, with a decline in unpackaged exports offsetting an increase in higher value premium bottled exports. And it is important to note that 90% of our exports to the US are unpackaged, to be packaged in market and then sold in the UK or re-exported elsewhere in Europe. Wine consumption in the UK has also declined over the last 3 years and is forecast to decline out to 2029, following similar trends in other major markets. Adding to the headwinds in the UK are ongoing increases in taxes and duties on alcohol, including wine. However, Australia remains the number one category in the UK off-trade market, with a 23% market share ahead of second place France with 13%. In comparison, Australia is ranked fourth in the on-premise with an 8% share, trailing wines from Italy, France and the US. So this suggests that there is still some upside in the on-premise for Australian wine, albeit challenging. Australian exports to the rest of Europe have been steadily declining, with declines to Germany, the Netherlands, Belgium and France, more than offsetting increases to Scandinavia, Ireland and Poland. And the increase you can see there to the Middle East and Africa was driven by increased bulk shipments to South Africa, which is likely to be opportunistic rather than a reflection of ongoing demand in that market. So this chart here shows exports to mainland China and Hong Kong combined. So the removal of tariffs on Australian bottled wine in mainland China in March 2024 saw Australian wine exports grow rapidly to the market. The chart also shows a small spike in exports in the month prior to the lifting of tariffs, which was an increase in exports to Hong Kong, which was likely due to some exporters perhaps anticipating mainland China reopening to Australian wine. Now, while the increase in exports to mainland China have been exceptional, it's important to note that the volume shipped to mainland China was much lower in the years before the tariffs were introduced. Volume shipped in the 12 months ended June 2025 was 30% lower than June 2020 and 50% lower than the peak in June 2018. And the growth in both volume and value has started to slow after the initial surge. Importantly though, Australia has reclaimed its position as the number one importing country with a 38% share of imported volume in the 12 months ended May. However, the lower volumes compared to the pre-tariff period and the easing of growth reflects that wine consumption in mainland China has been declining by 9% per annum in the last 5 years, and the total market volume is now a third of what it was in 2019. IWSR have forecast the market to continue to decline, but at a much slower rate than in the previous 5 years, with growth in Australian exports partially offsetting declines in the domestic consumption and other importing countries such as France, Chile, Spain and Italy. Exports to the rest of Asia outside of China have been relatively volatile from year to year, which reflects that for many of the markets in the region, wine is an emerging category. Trade in the region has been impacted by the changing circumstances in China, with some exporters pivoting between markets in search of profitable opportunities. After a period of decline, exports to Southeast Asia have started to grow again in the last 12 months, and volumes are higher today than they were 5 years ago. And the recent growth has been driven by record volumes to Thailand, as well as growth to Singapore, which is a major trading hub in the region, and Malaysia. And the growth of these countries has more than offset declines in the last 12 months to Vietnam and the Philippines. Australian wine is generally ranked in the top 3 imported wine categories in most Southeast Asian countries, with Australia taking the top billing in Thailand, Singapore and Malaysia. Looking at exports to Northeast Asia, excluding China, they've been relatively stable over the last 2 years, with growth in exports to South Korea offsetting declines to Japan. It's important to note that Japan is by far the biggest wine market in Asia outside of China and also the most mature. With a total market size of 36 million cases, Japan is not far behind mainland China now on 43 million cases, but well ahead of South Korea with 5 million cases. And Australia's profile in these markets is lower than in Southeast Asia. Australia is ranked 6th in imported wines in Japan with a 5% market share, while Australia is ranked number 5 in South Korea with a 9% share. So that indicates there are both challenges and opportunities for Australian wine in these 2 key Northeast Asian markets. So as global wine consumption is declining, driven predominantly by moderation trends, the major growth opportunity for Australian wine is to recruit new consumers to the Australian wine category. And importantly, there is a large cohort of people who have yet to discover Australian wine. So IWSR reports there are 380 million people who drink wine regularly across the world. But of these, only 68 million drink Australian wine. So this suggests that there's an untapped pool of over 300 million people that currently drink wine, but do not currently drink Australian wine. So there are two key opportunities for us to consider: to recruit and convert these people who drink wine into Australian wine drinkers, and to encourage existing Australian wine drinkers to choose Australian wine more frequently during more occasions. So the question for everyone today, including Wine Australia, is how do we target these consumers and occasions more effectively to grow the Australian category profitably? One of the first steps is to quantify the opportunity by market. So where should we fish? We have adequate data available on markets and price points across the world to identify the size of the prize across the globe and how Australian wine is currently placed in each market. Our 5-year strategic plan lays out the target markets for Wine Australia's market development activities. So in emerging markets, we will aim to grow Australian wine's market share in Vietnam and the Philippines, and defend our already high share in Thailand and Indonesia. In established markets, we'll aim for our market share of premium imported wine to grow in the US, Canada, the UK, Ireland, and maintain our share of commercial imported wines in these three markets, as Australia already holds a very large share of these segments, which are actually declining. We'll also aim for our share of all imported wine to grow in Scandinavia, Japan, and China. Now, we make annual wine market data by price segment on over 40 markets, available to our levy payers via the Market Explorer tool on our website. So this enables you to conduct your own assessment of target markets that may suit your business. But having identified the target markets, we also need a much deeper understanding of consumer attitudes towards and usage of wine, including different styles that may align to different consumer needs and drinking occasions, and they can vary by market. So these consumer insights can help producers target both product and messaging more effectively and efficiently to provide an offering that is relevant to the consumer. Just based on existing research and driven by the trends discussed earlier, there are numerous potential opportunities to consider from an evolving consumer and occasion perspective. Given the time today, I'll only briefly touch on a few of those. So firstly, around low alcohol, organic, and sustainable wines as a general category. The mindful drinking trend has seen growth in the consumption of no and low alcohol wines, with no low being one of the few wine categories to record solid growth across the globe in recent years. So as consumers become more health conscious, there is a growing demand for wines that allow them to enjoy the experience of drinking wine while moderating their alcohol intake. IWSR is forecasting consumption of low alcohol wines to overtake no alcohol wines by 2028 that is, with low alcohol wine consumption forecast to grow by 14% per annum over the period compared to 7% per annum for no alcohol wines. Hence, the no-low opportunity for Australian wine appears to be greater in low alcohol wines rather than no alcohol wines. Preliminary research conducted by KPMG in 2024 that was commissioned by Wine Australia suggests that the best opportunity may be in mid-strength wine with an ABV of between 7 to 9% rather than at the very low alcohol end of the spectrum. The KPMG modelling quantified the size of the mid-strength opportunity for Australian wine across 10 markets at around 150 million litres, valued at almost $1 billion per annum, but over a 10-year horizon. So while this initial research provides some clarity on the mid-strength opportunity, more in-depth consumer research is required to define the mid-strength proposition for Australian wine. So with some Commonwealth Government funding, Wine Australia has commissioned Nielsen IQ to conduct quantitative and qualitative research to build and scale the market for mid-strength wine across 4 key markets: the US, UK, China and Australia. And the aim of this research is to identify the most profitable and scalable consumer segments and category proposition ideas. Now, the project is underway and is due for completion in September. While the population is getting older, the wine category is struggling to recruit new generations of drinkers. Millennials represent a highly valuable market segment as they enter their prime income earning years. And when they do buy wine, they are more likely to buy more expensive bottles rather than the average wine drinker. So their preference for premium wine combined with their growing purchasing power makes them an increasingly important opportunity for Australian wine businesses to target. Excuse me. So the opportunity for Australian Wine is to make our wines more relevant and appealing to millennials and Gen Zs as part of their experiences and lifestyles. And as more Gen Zs reach the legal drinking age and millennials reach peak earning potential, continue to engage and recruit these demographics will be crucial in arresting the decline and growing wine consumption in the future. We need to give these younger drinkers a reason to choose wine over other alcohol options, particularly as preferences continue to evolve. Just want to quote Rob McMillan in the 2025 State of the US Industry Report. Wine is what young consumers want, they just don't know it. In line with broader beverage trends, there has been a shift towards wines that offer consumers something lighter and more refreshing. Excuse me. While a market remains for the big red wines that we traditionally do so well in, consumption and consumer preferences, especially among the younger demographics, are shifting, with more people opting for lighter and more refreshing wine options. And according to the IOV, over the past few decades, the consumption of white, sparkling and rosé wines has grown, while red wine consumption has decreased. As such, there are growing opportunities in lighter red wines, such as Pinot Noir and Grenache, as we already discussed on the domestic market this morning, as well as in white wines, rosé and sparkling wines, and innovations like spritzers. For the younger demographic, these wine styles may better meet their needs and taste and involving drinking occasions. One area of opportunity that has seen significant product innovation is in alternative packaging formats, reflecting broader trends towards sustainability, convenience and enhanced consumer experience. There has been a move towards a range of formats as alternatives to the traditional 750ml glass bottle. From a sustainability perspective, there's a growing shift towards using recyclable and biodegradable materials. And to reduce carbon footprints, many wineries are opting for lighter glass bottles, which require less energy to produce and transport. And wine in cans are becoming increasingly popular due to their convenience, portability, and lower environmental impact. They're ideal for casual settings and outdoor events and may represent an opportunity to make wine more relevant and accessible to the younger demographic in nightclubs. And canned wines are typically available in single serves, which cater to consumers who prefer portion control or don't want to commit to opening a whole bottle. And then there's kegs, and on-tap options may be also appealing to younger consumers in on-premise settings. And we've also heard this morning around pouches and cartons and other developments. So there's certainly a lot of opportunity in the format space. So I'll just wrap it up now. So most of the trends discussed are not mutually exclusive, and while they do present challenges, they also create potential growth opportunities. And the opportunities highlighted may not be relevant or suitable to all wine businesses. And as mentioned, we shouldn't ignore the wines that we have become world renowned for, and the market still exists for those traditional wines that we excel in. But we also can't ignore the trends that are influencing consumer behaviour and resulting in wine consumption falling and in preferences evolving. So hopefully highlighting these opportunities will promote new conversations to help the sector evolve and thrive in the years to come. And Wine Australia, from a market insights perspective, will increase our focus on exploring these consumer trends in greater depth by market over the next 5 years. In the meantime, I'd encourage you all to jump on our website and explore the Export Dashboard and the Market Explorer, which are available on our website. You can also reach out to us by phone, email, or book a time for a more in-depth discussion, as Angelica mentioned earlier, via the Ask an Analyst booking tool. And we'll also be around for a chat at next week's Wine Tech Conference. We'll be on stand 1107 from about 9:07 and just ask for 007. That's it. Thank you.
For 007, of the 300 million wine drinkers who don't currently drink Australian wine, what portion currently drink imported wine? And then in brackets, or for EU, drink wine from outside the EU, as an example. That might be a take it on notice question.
I probably will take that on notice, but we certainly can do that analysis to break out those wine drinkers by imported wines and by country. So, yeah, we can do that.
And lastly, I'm not sure who specifically, in fact, it might have been to James, who I think just left, but I'm premised, as the 4 to 5 times markup on wine compared to 2 to 3 times on beer and spirits pushed consumers to other categories and hurt our market share. I think the answer to that is that markup varies from business to business. In some businesses, wine markups are not 4 to 5 times and beer and spirits are more. I think it's probably a generalisation. I'm happy to be proven wrong on that, but from what I've seen.